All right, we're going to set up a new trade in SPX. This is a 112 bear trap. Real quick, we can look at a chart where we are. Chart doesn't really say a whole lot. We've just been moving sideways over the past couple of months. We did come down and retest area where we had consolidated late last year before we took off. We came down and test that area at around 3,800 just a couple of weeks ago. Now we're trying to rally off those levels. Looks like we're still making a series of lower highs. So I'm assuming that this move here is still in a downtrend, but in the context of a longer term time frame, we're just doing a whole lot of nothing. Now we could potentially break out and trade towards 4150 over the next month or so, or we could completely break down underneath 3850. We could probably run into some trouble. But in any case, this is a weekly trade that I put on every single week, usually on Tuesdays. I'm going to look for 52 DTE. So now we have May 19th, which is a monthly expiration cycle. And we have May 19th, which is a weekly expiration cycle. The monthlies will stop trading on a Thursday with Friday AM settlement. And the weeklies are going to trade all throughout Friday, which is the weekly expiration. And the settlement price is going to be at the close on the Friday at 4 p.m. I'm going to go ahead and use the weeklies. You can use monthlies if you choose to. Doesn't really make a whole lot of difference. Looking at the prices, there's not a lot of difference here. This trade is going to be set up by buying to open a 40-point wide put debit spread. And I'm going to pay for this put debit spread by selling 2 of further out of the money puts naked. I'm looking to collect somewhere between $10 to $11 credit for one bear trap. So let's see what that looks like. I modeled this trade a little bit earlier today, and the strikes I came up with were 38.80, 38.40 for the put debit spread. So let's have a look at what that looks like. So we're buying to open 38.80, and we're selling to open 38.40, which makes it a 40-point wide put debit spread. This put debit spread is currently going for about $11. And then to pay for this put debit spread, I'm going to sell 2 puts. And let me just explain my thought process here. So if I'm going to buy a 40-point wide put debit spread for $11, I'm also looking for a put option that is trading at around $11. And I'm selling 2 of those. So the first naked put is going to cover the cost of the put debit spread. And the second naked put is going to pay me a credit of about $10 to $11 in total to hold risk for the next 52 days. So just looking at where the prices are, 3,400 put is currently going for about $11. So if I sell 2 of these, I get a net credit of about $10.95. So I'm going to try to get in at about $11 credit, and this is what the risk profile looks like. Our short out of the money puts are about 14, just about 14% out of the money. I do have a stop in mind. So let's just go through possible scenarios here. Scenario 1 is that S&P at expiration above 38.80, we get to keep $11. If S&P is somewhere inside of 3,400 and 38.40, the put debit spread is going to be worth its max potential value, which is 40 points or $4,000 plus $11 that we're collecting up front. So this trade has the potential of making at about $5,100 or so inside the bear trap at expiration. And scenario number 3, if S&P completely rolls over and it starts to trade lower, we can use delta hedging techniques to kind of give this trade enough time to potentially see reversion back to the mean, as well as volatility contraction. But if it continues to trade lower, now if I know that I'm going to make somewhere around $5,000 in the best case scenario, I'm willing to risk maybe $6,000 or $7,000 at most. So if at any given time, assuming hedges are in place, if I'm down about $7,000, I'm going to get out of this trade and move on to the next trade. So that would be my stop. Right now, this trade is currently going for just over $11. So I'm going to try to, my goal is to collect $11. I could start at 11.30. If there's no fill, I'm going to work my way down, 11.25, 11.20, 11.15, right? But the goal is to collect as much premium as possible. So that's my trade. We are buying to open 38.80, 38.40 put debit spread, and we're selling 2 of the 3,400 puts naked. This trade is currently going for about $11.35. I will post any updates or adjustments as needed